that there's money that have been transferred out of my account that I didn't authorize. They're going to file a claim with the bank. You need to partner, as Radhika said, with your IT department or electronic banking, because they have access to reports from mobile banking that your team should be educated on and trained on, because those IP addresses will give you a physical location. If the customer claims, I live here in Los Angeles, but I don't know how this transfer of $5,000 occurred. I never did this. You can prove that by pulling these reports from mobile banking. It'll give the date, the time, and the amount of the transfer. It'll show you that the IP address is at that time of the reported fraud was actually conducted in Atlanta, Georgia, or even Brazil. It could be halfway around the world or halfway around the US. That is an indicator that, you know what, the customer is not lying, it possibly is fraud, because the customer can prove, I was in Los Angeles at this day, at this time. I've never been to Atlanta, Georgia, where that IP address shows that that transfer was initiated. So those are indicators, and other indicators on those mobile banking reports are anonymizers. It'll show that an anonymizer was used if a customer's credentials were compromised, because the purpose of an anonymizer is to really shield and hide who the identity of the end user is. And they use a proxy server, so it shows you that it could have been Amazon.com, but it could have been somebody in Ukraine pretending to be Amazon to try to get you to click here to send your credentials or information that they can utilize. So that's information, again, on those reports from your electronic banking department.
Absolutely. And we talked a brief, communication within the organization with various departments, the IT department, mobile banking, operations, etc. I also know that, for example, that text messaging has been on the rise. My bank, I know exactly the address that it comes from my bank when they're giving me text alerts in regards to the alerts that I've set up. But recently, for example, I'm getting text alerts from a different number that's saying, oh, your account may be potentially compromised, click here. Or your account at such and such bank may be potentially compromised. But I know exactly where my bank texts me from. So I know that that's fraud, but not everybody does, right? And so communication back out with your clients too, ongoing communication as all these new areas of risk have increased, and all these computer bad actors are sitting by trying to figure out new ways to get to your money. We have to constantly educate our customer and keep them up to date on the latest and greatest scams.
Absolutely.
The other area, which has been a direct result from CARES, but again, some of our monitoring techniques are what we've always used, is unemployment insurance fraud. My goodness, there is a lot out there for unemployment insurance benefits and the disbursement of funds. Now, I know for California, I believe that everything is dispersed through an EDD card and it's just reloaded, but there are other states that do direct deposit. And going back to, establishing fake accounts to applying for uninsurance or unemployment or different kinds of relief programs under those false names, and then having them come into the false accounts, right?
As well as coming in the names of third parties.
Yes, yeah. Fraudsters could pocket up to $26 billion in uninsurance benefits. Can you believe that's insane? And I know for a fact that the Department of Labor is so behind in trying to track them down. But scammers are stealing people's identities to file for unemployment insurance under their name, but yet having the funds either populate a debit card that they're in possession of, or as Liz said, direct deposit at another account. The states truly do rely on self-certification alone, and there are no other certification methods. Again, in terms of red flags, make sure you review the account that's being opened and receiving the benefits. Take a look at the benefits that are coming in if it is direct deposit, in the beginning. I know that many of us for BSA put a higher alert for new accounts in the beginning. Same alert would apply to this. or looking at the account to see if it's receiving multiple unemployment insurance benefits or other types of benefits or programs. And then, newly or established accounts that all of a sudden didn't have activity, now all of a sudden have activity, you know. Imposter schemes, where a fraudster poses as an official entity to defraud victims. We've seen that kind of scheme before. Money mules, again, another scheme that we've seen before, but now just using unemployment insurance benefits. So making sure that really our community banks need to take a risk-based approach when they verify identity. That's everything. So Liz, we're going to talk about what are some of the top areas of new COVID-related concerns, but Liz is going to talk about how to keep your program up to date as a result of all these new scams.
Absolutely. So Radhika went through a whole list of, red flags and what to look for. As she stated, the frauds and scams and schemes, they're the same, just maybe, a different twist on it, but all the red flags are the same. But what has changed as a result of the pandemic? Cash filings CTR filings should have declined. Most likely, it's the end result of non-essential businesses having to shut down. It was a government shutdown for businesses to not operate. So your restaurants, your nail salons, anything that operates in cash should have seen a decline in filing. So what has that done to your program? Loans, though, the volume in PPP loans probably has increased. And what have you done then to monitor those new loans? Again, unemployment benefits also have increased. So direct deposits or the use of EDD cards, those debit cards, you will not see that. Only if you see the direct deposits coming into your customer's account. I do realize too at the very beginning, a lot of individuals panicked, just like they panic bought, toilet paper and other things. Customers were withdrawing cash from the bank, thinking cash, is what will get them through this pandemic. So you would see a large cash withdrawals by customers, but hopefully that has tapered off as well. What has increased is mobile banking, because a lot of individuals, could not leave their home. They had to start utilizing online banking, or if you do go to the grocery store or other stores, I have seen signs now where they say we only accept credit or debit card transactions, no cash allowed. So increase in mobile banking applications, logins have increased. Again, as Radhika shared, fraud is on the rise, and you cannot ignore your OFAC sanctions program as well. As a result of all this, we have to factor in too that employees are now working from home, or you have limited staff on site. How is that affecting your program? As I shared, CTRs have declined in filing. What are you doing with those employees now that are charged with filing CTRs? Here's a good opportunity to cross-train them and to learn how to manage and review alerts, how to conduct, due diligence. Start cross-training because it helps benefit your department, and it benefits and enriches your employees as well. Other things I'd like to share too is that borders are closed. So as borders are closed, it affects the criminals. They can't move that cash either. The illicit cash that they have collected from selling drugs or counterfeit goods or from other illicit sales, they need to move those funds. And how are they moving it? Well, they're using cash bulk smuggling, but now they're also utilizing individuals. Let's utilize individuals' bank accounts, infuse it with cash, and have them move the funds for them. And those struggling businesses, the ones that are fighting to stay open, the criminals are taking advantage of them too. It's like, hey, I can help you keep your business open. I can infuse cash into your business, and then they will just pump all this illicit cash into a non-essential business. Now, if you start seeing an increase in cash deposits by some of these non-essential business that should still be shut down. Granted, right now, a non-essential business is starting to open up slowly, but then the cash intake shouldn't be that drastic either. Those are red flags to detect what is going on with those customers, especially non-essential business. But what have you done to affect your staffing model? how have you applied, redoing, moving your staff to review an increase in your alerts and increase investigations. Again, what is not happening right now, such as CTR filings, move those staff into training them on something new. It helps them. And then your transaction monitoring system, follow your change control procedures, but step back and realize those PPP loans, is that a new product that you have to initiate into your transaction monitoring system? Is that a new code you need to feed into it? And how do you monitor? Granted, you've got rules for volume, movement of funds. Is that capturing the PPP loans? There's funds are coming in, funds are going out. Are you monitoring for that? Are you monitoring for frequent ATM deposits? Maybe you need to lower certain thresholds. And as you adjust your transaction monitoring system, especially for cash review, ATM, ACH transactions, electronic transactions, do you interface with mobile banking transactions? Again, transfers of funds. Review that, especially from beginning of March to, I'd say, end of July. If you only just started adjusting your transaction monitor system, say in July, look at that output. What are the results? If it shows that there's an increase of alerts that have been triggered as a result of, modifying your system, then you need to consider, do I have to do a look back from March to end of June when we didn't affect our transaction monitoring system? You don't want to be caught with your pants down and saying, oh, there is information there, there's activity there that we didn't detect during this period of time. I highly recommend that you take that take that review and do a look back to ensure, are we missing something that we should be reporting on? And remember, despite the fact that resources are limited, employees are working from home, your bank has maybe reorganized to try to cover for the pandemic, you need to also determine, is your program still effective? Now, the regulators, they know that every bank now has a BSA program. They have their policy and procedures. Hopefully, they've communicated that to the board and management. All 5 pillars are in place. You've checked the box. But now they are reviewing how effective is your program. Do you understand the risk that your bank is facing? What have you done to mitigate that risk? Do your employees understand how to mitigate that risk? Are the employees educated enough to report suspicious activity? So your program needs to work despite, a pandemic, despite a natural disaster like hurricanes, floods, or earthquakes. Your program still needs to be effective during this time, normal times, as well as challenging times. So, do a quality review on an occasional basis, whether it's quarterly or semi-annual, but that is a way to test how effective your program is. You need to know what the gaps are so you can shore up those gaps, and then also report it to your board of directors so that we identify deficiencies, but this is how we corrected it to stay on top of it, because the board is ultimately responsible for the program, so you need to stay in constant communication with them.
Liz, if I may, one of the things that we
Sure.
talk about, if new alerts were produced or large amounts of results, there was a statistic recently that I read that of the baby boomer population that didn't really adopt the electronic payments, options or shopping online or debit, any of those solutions, 80% of that population is now performing all their transactions online.
Yes.
So going back to your comment about new alerts produced, have you configured for that? And I'm going to put in a little plug for model validation and calibration. You are constantly always having to calibrate based on new risks, new alerts, new products, but don't forget the model validation. That's really critical to make sure that this is still operating effectively, right? So